Hello everybody, hope that you are doing very well and welcome to this evening's Contenders live stream where I have a really interesting one for you all today. By popular demand, it was like an anonymous decision, unanimous decision, an anonymous decision which I put to the group of what do you want today? The final part of harmonic patterns or presenting a case for the bottom being in on Bitcoin because I was going through some technical analysis. Obviously, in the champions group, I was just posting some technical analysis. I was like, "Oh, this is really looking bullish." And then I put it to the team. Do you want me to make this into a stream for you all? And basically, everybody said yes. Put it into a stream. So here it is, the stream. Unfortunately, we already have had a move up since I put that question. So we've seen a little bit of movement. It would have been nice, I guess, if this stream was 2 days ago, but nevertheless, more of a macro view. Nice to see, I guess, some of the tools that I use, how I build a case. That's what I'm going to be going through tonight. I think you'll find it very interesting, I'm sure. And then so that's going to be the main part, and I think it's going to go on a little while because I have a lot of slides of all of the tools that I've actually got as a Confluence here. So yeah, it's probably going to be a long stream, I imagine. Maybe, I'm not sure. I'll see how long it takes to go through it all. But yeah, starting with Omnimize Go. No, this is actually, I meant to put here ICX icon. Yes, last week was Omnimize Go. This week icon chart of the week. Which actually was really, really nice. As you'll know, that really yesterday and the start of today, alts have been all green. Pretty much every altcoin's been green. But when I posted, obviously, this is chart of the week, okay, and Bitcoin obviously moved up, okay, and Icon was the only altcoin, okay, along with Ethereum and Litecoin, actually, so the three. But Icon was the only sort of mid cap altcoin was to move up, so I felt very happy with this. That it was like literally the one, the handful of alts that were green, the majority were very much red, down 10%. So for Icon to move up during this volatility, yeah, was just nice as well, I suppose. I like that everybody likes that background. That was made by one of the members here. Yeah, really, really kind of him, and yeah, brilliant work. So yeah, thank you for that, I suppose. And yeah, I'm glad you all like it. So yeah, chart of the week for Omnimize Go. What am I on about? Icon. Okay, so this was actually a two-layered entry, and this is where it helps so much to know the coin you're trading. Again, I cannot emphasize how much it's really important to know this. As you'll know, recently I started trading altcoins which I've never touched in my life. And then when I compare the difference to trading these altcoins that I've traded for now years, I know Icon really well. So one of the tips that I can give you is that I know Icon. If you remember, it wasn't actually that long ago. So it was maybe I want to say 4 months ago maybe, where Icon had a really, really big pump, okay? And on its first retrace, it front run the 618 by one single sat, okay? It had a secondary pump, it came back down again, and it front run the 618 by one single sat, okay? And this was just so perfect for me, because what we had here was another move up and a front run of the 618 by one single sat, okay? And this is just was just history repeating itself it makes me very certain that we're going to, it just seems like the same bot that was buying it up last time has bought it up this time, so I was expecting a rise in price. Well, I can't say it was a bot or a human, but nevertheless, the same pattern of the front run of the 618. So my entry was a laddered entry, okay, one just under the liquidity grab, because you can never go wrong with entering on the lows on cryptocurrencies, and the second one was just under the 618 of this one, but I will be totally honest, I did feel there was a lesser probability of it happening, but nevertheless, because of Bitcoin volatility, it could have happened, okay, so that's why I went with a two laddered entries into it. Liquidity grab, the 618 if it occurred. Stop loss literally just below the lows. Okay, right way down below the lows. Where I had in mind, obviously, the daily being our target number one. Well, basically to close out the trade. So I did close out the trade as well. But the daily was obviously the first level, and then you have a very big space up to the weekly. And I'm mentioning this because we have since hit the weekly, and I'll show you exactly how I've traded it since, by the way, because it's just been resistance flipping into support, so yeah, these levels have been really, really key, okay? So yeah. If you see here, let me load up the chart. Well, I don't need to load up the chart. I'll do that in a second. But basically, what we had was, the liquidity grab of that lows. As you can see, the swing failure. Okay, so just typical cryptocurrencies. So you take the low, close back above it, straight away. And obviously, when you're trading these steps, you need to have alerts. Okay, so alerts are there to help you. Alerts are your friend. And if you trade with no alerts, then you're going to miss so many things. So for instance, when I got alerted, obviously, that my first entry had been hit, and you see a swing failure pattern, I actually didn't cancel the low order and enter. I didn't enter it high, but I just was aware, okay, that's good. We've seen a swing failure pattern. I didn't, at this point, in hindsight, I should have, but nevertheless, I didn't cancel the low order, but I was happy with one of two orders being filled, if I'm totally honest with you. It still had good size in it. And so swing firing that low, I mean, if you were not in the coin, so from a perspective of not being in the coin, if you had an alert on this low and then your alert goes off and you see that, well, then you can buy in, okay? Because that would be a buy signal on its own, okay? So I had an order waiting because I'm not tracking the altcoins actively like as such, but even if you didn't have any orders waiting, but just an alert, and you get alerted on the swing failure, then you would have entered at this price anyway, especially seeing how it was front run here, and then again you're on the CC. So how many times have I shown you, like, where you get the CC bounce, and you get a secondary CC bounce, like, also with the the fact you're going low and then a higher low here and another higher low here in a form, it's not obviously one, but like an ascending triangle-esque sort of higher lows, and then the liquidity grab of swing failure patterns. You just see this so much in cryptocurrency. So that's how it traded out. If we load up this chart a second, so here is the chart, and if I come down on a smaller time frame, I'll show you like the support resistance flips, because they were absolutely perfect. What we saw here is obviously from the original, so this is where I was interested in it, and obviously, wasn't interested on this first pump because I never trust on the altcoins so much the first pump, but nevertheless we had our first pump and then our front run of the 618 here, secondary move up. Okay, higher low and then another higher high before coming down for the liquidity grab. So you can just see like double tops. Again, Icon, okay, Icon really likes to double top and double bottom. If I find the history on this chart, I can show you so many examples of double tops and double bottoms. Oh, Dios. So here would be one. Oh, this is a bit embarrassing because I cannot remember the exact time now where it was actually double bottom. But I have like posts of this on my. I'm a sad guy. I have on my Instagram like a real big like layout of Icon and when it like done so many double bottoms in a row. But I literally can't remember the date of it right now. But if you go on my Instagram, literally I've got a post of Icon. This is a double bottom on Icon, and just like it done like 3 double bottoms in a row and double tops. I kind of want to go on my Instagram to find it right now, but I'm not gonna bore you all with that. But yeah. If you feel like doing that, you can go on my Instagram, because I can't remember the date offhand, if I'm totally honest with you, and I'm not going to actually find it. So you can check my Instagram if you're interested though. But so this is a coin that does like to double top it, as well. Okay, so when we obviously saw that it was, just for the simple fact that you were double topping the old support flipping resistance, one can imagine the retrace, and the retrace is what happened. Okay, of the swing forward with low, coming back up, and then obviously we come up to the daily level where I did close out the trade. Okay, so when I was making this yesterday or the day before, I was straight out of that trade when it hit the daily level. Okay, what it actually done though was just like technical analysis perfection, where you can just continue taking trades on it, because from that daily, okay, you clearly got rejected at the daily. What did you do? The old resistance, you come back down, flipped it as support. That's another entry. Okay, so that is another entry where obviously now you're going from entry here, really stop loss here, targeting the weekly. I mean, that is the setup. Like, that is the setup. So it would like look like this. Okay, so support flipped into resistance. I like to go 2 lower highs back, so give yourself a bit of room, but you're obviously up here going to be targeting the next resistance level, which is the weekly, and you can see how perfect literally it played out, coming up to that that next resistance level. Okay, and that came up to the weekly, touched it. Just look at it to the absolute sat. Can you tell I was trading it? But come up to the absolute sat there before getting a rejection. Okay, and now you'd be looking at the same again. So obviously you'd like another dip back down, but then you're going to take the trade again off the daily. Okay, so let's say you get this, come back down once more. Okay, take it off of the daily resistance again. You can go a few high lows back, and then your next level here you'd be looking up for the monthly. Okay, so it's just like a recurring pattern. Obviously at some point it's going to fall down, but Not too difficult of a trade. That would be the next one that I'm going to take on Litecoin. What am I on about? On Icon. Um, yeah, like really, 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 really technical traded, really well technical trades. The way it began, and then the way they like bounced off the levels, the support resistance flips, just like really, really, really nice. So yeah, I would like this to come down one more time, about 1570, and yeah, take another one to be honest with you. But yeah, that's Icon. I hope that helps you all because you just see these setups so many times. Like you go through altcoins, you can see the setup a few times a day. Icon. If you had no orders waiting for the hourly close to confirm the swing failure, or maybe high term time, 1 hour absolutely fine. 1 hour is a high term time frame. You have to remember as well. I'm pretty sure I wrote this. Yeah, this is short term trades, so it's like day trades. So like 1 hour is definitely enough. So yeah, you see this 1 hour. So if I just zoom in, so you can actually see here. So this is the low that I'm talking about, by the way. This is the low I'm talking about. When you see that, the liquidity grab through it and close above, well, that's definitely going to be like a signal to, a signal to buy. Thinking of the bigger picture and what's happening here. So maybe not just a swing failure on its own, but on the bigger picture of what's happening. Yeah, that's like a really good opportunity. Okay, so even if you had no bids waiting, you would have got filled, very, very slightly higher, and at least the first target. So second, however you would have traded it. But yeah, swing failure on Icon. Okay, so so the next question by Chris is what time frame you traded on? I traded it off of the 15 minutes. So I did, that's the way I took it. So I did trade that back again off of the 15-minute flip, and this was at a time after this one where the alts in general started to go crazy. So you saw like EOS just moving up insane amounts. Obviously, Bitcoin SV, you saw, I didn't trade that, by the way. Like Bitcoin SV, I was not in at all, and obviously that moved like 300%. on Bitfinex, like 1,000%. So I wasn't trading that one, unfortunately. But yeah, like EOS though, like Litecoin, I was trading. Like, I'll cover this for 1 second because I do feel that it had an influence on Bitcoin. But like the exact thing that I told you, this was in the Champions live stream, I believe. This was the Champions live stream on Sunday, and we were sat here. I just said, look for this to backtest the weekly. If that holds, long it up to the next level. And that is like my exact words, okay? Litecoin's looking good. It's obviously broken through the weekly. All you want to see is this resistance, okay? The old resistance, flip to support, and go for the longs. And that's exactly how it traded out. So, and obviously like Litecoin and EOS, arguing leading indicators of Bitcoin, all of it coming together with the majors like this was just real good strength for the Bitcoin to move up, and Bitcoin did move up. But yeah, that was, so easy trades. I'm pretty sure I gave on the trading updates a few days ago as well that I was in both of these. Litecoin and Icon, and that was obviously before they both took off again. So yeah, Anyway, going on to Bitcoin, where I am, by the way, expecting volatility during this stream, specifically in 10-15 minutes time, because the funding on BitMEX is to be paid. And if I just load up the website a second. Okay, what you will see here is the funding in 14 minutes time is to be paid, and it is quite high. Okay, so yeah, I am expecting some volatility. But with that said, let's go over what I want to cover in today's stream, and that is. This was the print screen that I put in. So yeah, this was what I put in the group. Basically, I was just like uploading so much like technical tools. I became like really, really bullish. Like, I was just unreal. Like the amount of Confluence. And the time, and I was just like to everyone, I was posting it in the stream, and then people were like questioning like about because I put technical tools in that people hadn't seen before, and I was just receiving so many questions. I was like, it's probably just going to be easy if I make a stream. So I put it to the group rather than answering all the questions individually, which is a bit kind of time consuming. I thought, it will help. I'll put it to the group. If you want that, then I'll put it in a stream. If not, then I think I wrote at the time, whoever's online is going to be the only people to ever see this, because I wasn't planning on doing this stream and putting all of my macro charts onto the stream, if I'm honest. But because people wanted it, everybody voted for it. So that's why you got it tonight. I hope you enjoy it. This next one. Anyway, so potential bottoming for Bitcoin, and this is obviously speaking of a very big macro picture, okay? Big time frame view, okay? So potential bottoming for Bitcoin, okay? Yeah, so I'm going to cover several tools, quite a lot of different tools, okay, which make up a case for the bottom being in for Bitcoin. Yeah, I just have to put this for like legal reasons. Obviously, I'm not a financial advisor. I'm not telling you to buy Bitcoin. I've put in like Bitcoin can go to zero, you can lose all your money, and I also suppose I should just, for the sake of covering myself, just make sure you pause and read this right now, because obviously any setup, anything that I go through cannot be taken as financial advice. Okay, just definitely not that. This is for all educational reasons. Okay. With that said, okay, I have been accumulating spot Bitcoin while it's been at the lows between 7,400 and 6,900. For me, like making regular purchases here, as you know, the last time we hit 7,400, just before like the 45-50% pump, obviously I was buying there as well, like spot new Bitcoin. And then as we came down to the level again, and then really as we started forming, like for me, an accumulation pattern, which I'm pretty sure I've like listed around anyway. But yeah, we obviously you start forming what could be a potential bottom. As you're going to see, the like list of reasons that I'm going to cover for you all tonight give you strong feelings for this. And that was my reasonings basically for this, of making spot regular purchases of it. And I just added this in. You can see I've like blocked out the names because I don't know whether people want to be named or not, but I'm sure they don't care really. But yeah, this did make me laugh that I never really say in a group, I'm never going to say exactly buy this, sell this, because you have to just read my charts and make decisions for yourself. I'm not actually here as a signal provider, and that is definitely not what I'm like after at this. I'm just putting out my TA. You can read my TA and then make your own decision. Hopefully once you've watched all the content, understand how I'm thinking, but yeah, this guy kind of summed it up like saying, you have to make your own decision at the end of the day. I'm just here for posting things. But did make me laugh quite a lot, where he said a hint I took yesterday to buy was all of my posts saying this is really bullish, and then me actually saying, I'm actually going to even put this into a stream. And then obviously the following day, we moved up like 10%. So that was obviously a good buy by using intuition there. Because yeah, anyway, so yeah, this is what the next stream, and then we'll start going through all the tools. This is what I like to say. Like, you have to think as well. So the way that I'm like really really conscious now of never trying to. I'm never going to show position sizes again, because I think that was a really big mistake of myself to sort of show some of the position sizes that I'm using. But so I'm trying to like not do that anymore. But you have to think that in like a way to put this, I have like got a decent amount of money, and I'm like trying to accumulate positions. You can't just go market buying in. You want to see, when you want to build up a good position, and I'm talking like a big position, okay, you want to have this like a long time and a low, okay, a long time around this region, because not to say it can't go lower, because while I was buying, I was under the, I wasn't saying like this is definitely the bottom. I was, absolutely aware that we could go lower, as low as, I was, possibly envisioning like 5,100, regions that this could go down to. And I was, more than happy to continue, like, data cost averaging, I suppose you could call it, of just like buying, as you go down, because I just view it as a very good option, as this was the question, I suppose. Like, are you still thinking this is wave 3 beginning on the macro picture? And like, yes, on the long term, I do believe so, and that's why I was making these regular buys of spot Bitcoin. And there's never 100% guarantee, and absolutely we could have fallen through this low, and that's why you just have to be aware that I was not banking on this 100% has to be the low. Okay, I'm like a guy that trades probabilities, not certainties, and even now I suppose like we can 100% still go down. This is by no way me saying 100% we're going up here. It's just giving you the picture. I'm aware that we can go down, and if the signs are there, I'll happily trade it down. I don't really care whether Bitcoin goes up or down. I'll trade it either way. But when, as you're going to see by the end of the stream, when you have so many factors lining up, it's hard not to think this is a good opportunity on the long term to accumulate a position here, because I think it's going up in price. Like, with that said, it can obviously go down. Okay, so and this is the thing, like when you are trading with like real big capital, you have to be making these informed decisions. You can't just go, oh, we're at the 618 support, I'll buy. Okay, that's definitely not going to work for you. You have to actually do the work, find so many different confluences to build a really, really strong picture. And what I like to do for myself is, you're going to see tonight, I've maybe got about 15, 20 tools, like different tools that have built up a picture for me to say, well, this is really good support. Okay, and then I will build another argument for a bearish case. Okay, so I have done that myself. So I built a bullish case and I built a bearish case. Okay, and then obviously you factor up, what's got the stronger case, and then you obviously naturally you're going to go towards what had the stronger case. And I do believe, for me, the most bearish thing is the Elliott wave count. For me, the Elliott wave count would support another wave to the downside, but I don't primarily trade off of Elliott waves, so obviously they're a good tool and they're useful, but with everything else stacking to the bullish side, it's hard to say, well, everything here is really, really, really bullish, and then we have Elliott waves, for example, that are looking bearish. Well, you're going to favor everything or one thing, and obviously in trading, you go for the probabilities, you favor the highest probabilities. Okay. Sorry, I just needed to take a quick drink there. Okay, so excuse me. But on the macro, yeah. So as I've said here, like when I was writing up this stream, so all the tools pointing to support here gives me reason to believe we're going to push up higher for at least another lower high. Okay, so I'm not necessarily, what you're going to see here is not me necessarily saying, we're going straight to 20k here, but at the very least, the support shows that we would put in another lower high, be that like 10,000. I'm not saying we're going to all-time highs or this is 100% going up, but there's enough support to support a lower high before at least another drop down, basically. Like I've said here, like the 25th of October, if you think back to the 25th of October, so what I mean by just potentially putting another lower high is obviously something like this, okay, where we do just go low or high, low, lower high, lower low, lower high, lower low, lower high, lower low. So that's what I was looking at, okay. That's just, I wanted to make you aware of that as well. So yeah, with that said, I suppose I'll just read the questions really quickly and then begin. Daniel, when picking these alts, okay, so for Icon, do you initially look for things like volume increasing and higher highs, higher lows? Yes, volume is going to be good, but the thing is you can't get real in-depth volume statistics. But yeah, volume is obviously pretty key, and yeah, just market structure. So when you see the higher highs, higher lows, or for Icon, for me, like I as you know, like when I gave that trading update, I gave I gave 2 altcoins because out of the list of thousands of altcoins, I only saw there was 2 good alts, Litecoin and Icon, and both of those were, well, obviously Icon was coming down off of a 618 and massively oversold. You have to think Icon's at all-time lows, so massively oversold, and like seeing the signal of the front run of the 618 was, and that's just where need to put in the time, see the characteristics and learn it. So that was the reason of why I was thinking that. Okay. And obviously Litecoin, just because of the fact you had come and back test and held a weekly, and there you go. I was also obviously in a leveraged long position, and that continued to go. So yeah, obviously we still had another $300 from that, but yeah, cool. So any other questions? Bulls get paid, so no, shorts are going to be getting paid at the next funding, which is in 5 minutes, hence why it pays to be in a short. I thought it was Tuesday. Been watching the charts. Yeah, Wednesday today. Take the risk or lose the chance. Yeah, exactly. With no risk, there is no reward. Okay. Can we watch the funding volatility now together? Yeah, if it happens. It's actually moving up, so yeah, we'll see 4 minutes. I'll speak as we're going through it. We're going to be on the Bitcoin chart anyway. But yeah. I think this, I just had to start with this because it made me, as a guy that just loves technical analysis and just trading in general, just to think of how the 2019 bull run started, just made me very, very happy to think we started the 350% rise in Bitcoin at the start, okay, of 2019 with a bump and run pattern off of an inverted head and shoulders. Okay, amazing, yeah, bump and run pattern, inverse head and shoulders, moving up in price. Okay, what do we have at the start of 2020? a bump and run pattern with an inverse head and shoulders. It's just like, what, like history repeating itself. And obviously I was posting all of this in the group while Bitcoin was around 8,100. Since there, we've moved up, up to 8,800, 8,900. So, yeah. Yeah, I guess if you were in the group at the time, you could have also made profits on this anyway. But, this was just crazy the way that it moved up. And I'll come over to the chart on all of the tools. I'm not going to cut, probably not going to come over to the chart and load up each one. But, on some of them I will, because otherwise if I keep going over onto each one, it's going to be, the stream's going to go on 3 hours. So bump and run 2019 start. Okay, so as you can see here, this was a nice bump and run. Obviously you can there's 2 trend lines that you can do for this bump and run. The first one is above this high. Okay, and you can see when you take it at this high for the bump and run, still descending triangle, drop down, inverse head and shoulders, break up. This trend line obviously gets it just as it become very impulsive, whereas this trend line obviously gets it, still the descending triangle, drop down, inverse head and shoulders, got it a little bit more early, but you can also see here where it originally still held it down back in February. Okay, and obviously the thing you like about this is the fact that this, bump and run patterns, how do you get a target for the bump and run pattern? Once you start your uphill run, you go to where the pattern started. So that was obviously 13,000, and you did not get any closes above 13,000. So that was obviously our bump and run gave, from entry trigger. Well, as you know, I didn't trade it at the lows. Although I recognized the patterns here, I was fully aware of it. I did not get into Bitcoin a long position until 5,000. So I nevertheless still doubled an account. But I started trading it a little bit late at 5,000. Okay, because at this moment in time, I was still leaning a bit bearish. And that's the thing in trading. I was still leaning bearish, but my shorts were all from 10,000 region. So I was obviously short from 10,000s. Just accumulating shorts up here because I was obviously really, really bearish in 2018. I lost. We obviously came down, made amazing money, and I got a little bit too greedy of trading stops. So although I recognised all of this, I didn't close my shorts and enter the long until 5,000. But who cares? Because doesn't matter. And obviously from there we rose. And then what I love about this is, so that was obviously the start of 2019 run. And then here we have the 2020. Okay. So if we leave both of these on at the same time, or just look how perfect it is. Okay. So descending triangle. Okay, drop down, inverse head and shoulders, massive increase. Okay, what we had here was a descending triangle. Okay, here you actually back tested it. So it's this is where it's a little bit different than 2018. But here you obviously back test the triangle, move down again. That's what gives you our trend line though. And you get your inverse head and shoulders, and you have now broken the trend line. Obviously, when I was posting this in the group, we hadn't yet broken the trend line, but it was obviously looking likely that you had, or you were going to. And now since then, you have actually broken out of this. So now you can say that like officially the bump and run pattern is underway now. Okay, so the bump and run is like kind of official, I suppose. You've had the daily close above. This is a daily trend line. So now really, okay, this is obviously, you have to think this is a long term, in the short term, you could obviously come and back test this, 8,200, let's say. But, really, even if that happens, your target for the pattern, okay, simply is going to be 14,000. Okay, so that's the pattern. Obviously, it could take a long time to get here, but your target's 14,000 for simply looking at this pattern. Invalidation, okay, because you cannot just buy here and hold forever, but invalidation would be coming back below the trend line. Okay, so let's say that you bought a retest, it gets a little pump back up, and then it does something like this and comes back down. Well, then you close out at a long, because coming back into here is it really, really invalidated the setup. Okay, especially anything below now. Specific to the pattern, anything below the trend line is invalidation. So that's how you would look to trade a bump and run. Coming back into that is totally invalidated the setup. Obviously, this is a bullish setup, and these signs were there. That this was going to happen. Okay, so if I just hide this again, I don't think I actually put a slide about this one, but this was really, really important. I will mention at the same time while I've got this on the chart, is obviously the simple fact that you were inside of this range, okay, for over a month-long consolidation. So I think it's 41 days, 41 days consolidation, I want to say. 46 days consolidation, so 46 days of consolidation. You broke out of that consolidation range. The fact that you back-tested the range and then moved up as well, like that's obviously a really bullish kind of sign that you break out the range, you back-test the range, and then, well, while I was doing it, you're here. So that was obviously another thing that I don't think I have a slide of. and as we all know, that was the 30th of September low that you back tested. So obviously from our decline from 11k or 12ks, you obviously come down 30th of December. 30th of September was the bounce period where you come up, swing failure pattern, the highs drop back down again. That was the level that also got retested. That was capping this range. You retested that and obviously moved to the upside again. But yeah, that was obviously also another bullish thing that I don't have listed, because that's more micro, smaller term. That this is more bigger term, macro picture. Yes, so some more factors. Okay, so I'm just going to list so many factors here for you. Like, different tools all give the same perspective that this is a low in for Bitcoin. Okay, so this factor number 2, very, very simple, this one. So they're going to get a little bit more complex as we go along, I believe. But yeah, from the low here up to the high, coming back into the CC. Okay, you know, this one's very, very simple if we think about it, because just think about what happened here. Okay, low. Let's just do. It makes it a lot easier for everything on the screen. When obviously from the high to the low, what did we do here? Okay, just think how like so amazing. High to low, hit the CC, we retraced. Okay, so now we put it the other way. Low to high, hit the CC, and I've started to move up. So that's just very, very simple. If we just remove this a second so it didn't clutter the chart, from high to low CC, low to high CC. And as you can see, there was no closes below it either. Okay, so it was holding the market. Okay, so there you go. There's another factor there that you were holding the CC. And then obviously a CC within the CC. So we all know that we were inside of the, you know, within that Champions channel on the large term time frame. And then from within that, you had an impulse and a retracement. And where did you come off of? The CC again? As you know, I leveraged long this. You know, I think my fill was offhand was 6,888. So obviously I closed out, you know, I did close out of this. I haven't held it all the way up to 8,800, but I did long 6,888. And that was obviously, as you can all remember, we obviously bounced off the initial 618, and then this was also the weekly level. I just had a lot of confluence here, and I haven't got it marked on the chart, but this was a 618. Again, CC, which had the weekly as a confluence as the support, and obviously you got the swing failure of this low again, and you know, it was off to the races really since then. But yeah, it all started within the CC, which is just great to see, you know. But at this point in time, obviously, because I did leverage long that, but I closed out at around, I can't remember offhand now. I think I closed it, like, obviously I closed it early, but I was still under the perspective of, when I'm leverage trading, I don't generally leverage trade for like macro perspective, and I'm like in and out. You know, if there's anything, I've said it before, like some of my weaknesses as a trader are that I do take profits too early, because, you know, in hindsight, you know, I could have stayed in this position for the next few weeks and made, you know, a lot of more Bitcoin, but that's not how I view it, you know, because at the time it was more of a short-term trade. But yeah, anyway, moving on. 2018 monthly support. Okay, so as you can see, I'm going to try and rattle through these because we have quite a lot. And like these ones that are so obvious, I don't think I need to spend too much time on, because you all know about this. But obviously this was our monthly support. So the 2018 monthly support, which like held you for 1, 2, 3, 4, 5 months before losing it, back testing it, and getting an extreme drop in price. Okay, so that was obviously the support that flipped to resistance, and you got expansion to the downside. So we obviously revisited that region, and you know, that was just an important factor. Okay, so the monthly support that was lost, flipped to resistance, moved down. Obviously, when you break through, everyone was expecting this resistance to hold here. Okay, and this is, you know, what you can see, that, you know, an area of resistance that doesn't act as resistance, when actually back tested, one still would imagine it to be support. Okay, so a support, just think of it like this, because this is a concept, that support that offers no resistance, if back tested, still is support. Okay, it's still acting, it's going to be acting as a support level. So we obviously had that there as well. I'm not going to answer all of the questions, because some of these questions you're going to see coming up in a little bit, by the way. But I'll stop briefly for a few questions. If I don't answer your question, it's probably because I got it coming up in a bit. Where can you find your object tree on TradingView? Very simply, it's on the right hand side here. So this is the object tree. Really, really, really nice. So you can just like hide things, put it back on. Yeah, really, really nice. And it's just bottom right of TradingView. Can you call this a V-shaped reversal? No, I wouldn't call this a V-shaped reversal, really, because it's not so much V-shaped. You have actually formed like, two, I guess like more of an, I guess if I had to say anything, I'd say call it like an Adam and Adam bottom, where you form like a V and then a second V. But overall, it's more like a bit of a rounded. I wouldn't call that a V-shaped on the weekly time frame. Maybe if it was something like this, straight down and straight back up, but this is got a bit more of a rounded fraction. Yeah, so I wouldn't call that a V-shaped, no. Anyway, so next one. So this is where you're going to see so this was the Wyckoff schematics, and this was the bullish Wyckoff accumulation schematic. And if you were a member of the Champions live stream, I had the question during the Champions live stream a few weeks back of would I label this as a bullish Wyckoff schematic? And I said it doesn't really matter how you view it, but I did say yes, you could label this as a bullish accumulation pattern. And what I really, really liked about it was the fact that you back tested it. Okay. Some people are going to say, oh, it was an overthrow of distribution, and I openly said to challenge people on Twitter that it definitely wasn't distribution. But obviously we had our several periods of this, primarily selling, selling climax, your automatic rally, secondary test, your last point of support, sign of strength, and then your backup. And so when you come and back tested this, was the sign that this is really, really bullish, because you've broken out of the range, you've back tested the range, and you've held it. That is a really big sign. There was accumulation, because I guess you couldn't say 100%, okay, until you really take the highs, which you've done now, by the way, because people calling distribution, and this is an overthrow, you wouldn't then expect another higher high. But there was this was a Wyckoff schematic that I was did post it in the group as well, while price was still at 7,900, and obviously we've hit 8,900 since then, so $1,000 upwards. But yeah, this was posted in the group. So yeah, that's a Wyckoff accumulation schematic that you also had. So again, just like building up a picture here, This is one that I really, really like. The fact that what we were doing here was bouncing off of this really, 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 really long-term trend line. So this is a very long-term trend line, and this, as you're going to see, is on BitMEX, but this is a trend line taken from the inception. Okay, the inception of BitMEX. No, this is not. Yeah, this is BitMEX. Sorry. Yeah, BitMEX on the log scale. Okay, and as you can see, this is a trend line that has just supported price, supported price, supported price, supported price, supported price, and supported price again. I mean, look at that. I'm going to try and find the one that I had for you and show you. The thing is, I'm not sure whether it... Here we go. It must be this one. Yes, it is. So if you see here, this trend line here, okay, so as you can see, look how well it supports price. Support, little deviation, support. Oops. Look at the touches. Support, you're talking to the dollar sort of support. Okay, we come on again into the future. And again, a little deviation, but support. This is years in advance. Okay, but another touch of it. Okay, and obviously that gave you another extreme rally to the upside. Again, look at that touch. Look at the touch. It's just perfect, isn't it? So you've touched it again, and you got another extreme rise to the upside. So this is obviously, okay, if we just hide this one a second and hide that one so it's a little bit more clear what you can see here. Look at it. So touch, and obviously a bounce. Touch, or extreme bounce to the upside. Touch, extreme bounce to the upside, and a touch. And, really, I would call that an extreme. 37% is crazy, crazy, crazy. So, like, extreme bounce to the upside. So it's hard to say that this trend line is not like fully amazing, and I want to put all my other trend lines back, but yeah, that is obviously fully amazing. And as someone mentioned, obviously in log scale you're still below this trend line, and that is correct. So on log scale you are still below that top trend line, by the way. Okay, so people are going to say, well, let's wait until 9,000, but yeah, obviously, yeah, on log scale you're not, but if you come into normal scale you're clearly above it. So you see the difference. Yeah. But yeah, that trend line for me was just insane, like really, 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 really nice. And obviously, when you're looking at data from 2015, you gotta be using log scale. You're 100% on log scale. So this bottom one is just zero question. You're definitely looking on log scale when you're looking at the trend line, and the way that it bounced off here. And if you look at the bottoming pattern, obviously both of them were the inverse head and shoulders, but the low, higher low bounce, and then obviously your low, higher low, and the bounce. And that higher low was off the trend line. This higher low, actually no, at the time that was just the wick off of the trend line, so that was another trend line that I drew. But obviously the same sort of patternings with the grind, that's just, yeah, I really like that trend line basically. Let me just mute Discord, because otherwise it's going to be making noises. There we go. Cool. So that was the trend lines. If I just hide those a second. Okay. So this is really, really nice actually. So this is a it's actually it's a bearish Gartley. But what you're going to see is, obviously, if we're trading the last leg, or the last wave of this Gartley pattern, it is giving you a bullish perspective. And this is obviously a really, really, really big. We've done harmonics last week, so you should all know about the harmonic. And obviously, what we see here is from high to low, 618, or the CC region, and low to high CC region. So when you go 618 to 618, what are you thinking? Your mind has to just be drawn straight away to Gartley harmonic pattern. Okay, Gartley harmonic pattern, that's definitely really, really great if this plays out, because it would see you rise to around 17k ish before obviously a drop in price. But then it would look like this. Okay, so this would be the Gartley, that you'd rise to around 15, 17k, 18k at a push maybe, before dropping down and then getting another rise. Okay, or at the very least, you'd just expect the drop, really, not necessarily a rise afterwards. But that still brings you up to around 17, 16k regions, doesn't it? Because you could hit that and then fall all the way back down, by the way. But nevertheless, yeah, that's nice. Who said technical analysis doesn't work? Yeah, we've not even begun. You're going to see so many factors that, like, this was a bottoming pattern. But yeah, obviously this was another really, really nice factor. The fact, for me, like Gartley, I have to say, is I think, as I said this last week as well when we were going over harmonics, that Gartley is one of my favourite patterns. Firstly, because you see it quite a lot, and secondly, because the way that it evolves around 618, and just 618 is absolutely amazing, and I love it. This is such a lovely pattern for myself as a trader. To see the Gartley happening on a macro picture on Bitcoin is just, lovely. Really, really lovely. So yeah, moving on to our next Confluence that we have. Okay, and this is a long view of the. So this is over on Bitstamp, the Fibonacci channel that you have. So if I actually load this one up, because it looks like I've missed a bit out of the picture. If we come over to Bitstamp a second, and from Bitstamp we want to put on the Fibonacci channel and put it into log scale. Yeah. Okay, so look at this. So I hope you can see it, because I know that the screen goes really, really small, and I do apologize for that. But as you can see, so this was obviously your low in 2013 before a crazy 1,900% rise in price. So obviously once you had that 1,900% in price, you had your secondary pivot low at the, around this 26th of August 2015. So that gave you your period to form your bottoming pace, and obviously that low from the August 2015 was when you then had your 7,500, massive increase in price. Okay, so they're really, really, really important pivots, aren't they? First low, massive increase percentage in price. Second low, even crazier, bigger increase in price. But what you will notice is the way this is so really nice is because the way they actually dictated where the top was to be found. Okay, so you see, all you would have had is pivot 1, pivot 2, pivot 3. Once you have these three pivots, you can see you come up, find reactions at these fib levels, find reactions at the fib levels, and then where do you top out? You get a deviation of the highs before ultimately coming way back down to your initial starting Fibonacci number, which you can see was influential here. Look at the grinding on the tops, touch exact touches. I'm not sure how well you can see this, but exact touches of the Fibonacci number, okay, before grinding along and taking up. And where did you come up to? Come up to around the 0.5, back test the 382, come up to the CC, back test the 0.5, come up to the 786. Here, a slight front run, but then obviously coming up to the top. I mean, I can't make it up. I just cannot make it up. As you'll know, I actually became a trader of cryptocurrency. Obviously, my market was in the stock background, and I was not trading the rise of Bitcoin during 2017, but I was trading Nvidia, and Nvidia was directly correlated with Bitcoin, and obviously Bitcoin was soaring in 2017, and I was sat in Nvidia, knowing that my stock is soaring because of Bitcoin. So I was like, obviously following the Bitcoin market since 2017, but I didn't put any money into it just because at the time I was a little bit cautious, just thinking, well, this is, I was under the impression that this is going to top out soon. So yeah, like I was watching this rise, by the way. Like doing TA, but I'd never traded it in, well, what was 2017. I started trading Bitcoin at the highs when it's had a sign of, topping out, and I shorted Bitcoin at the very highs. So yeah, I guess that was just another thing to note. But yeah, I never ever traded any of this on the rise, by the way. Didn't trade it, but I was like doing TA and following it, but I never put money in. My first trade on Bitcoin was a short. So yeah, I guess that's interesting side story. But yeah, on the way down, what I love about this on the way down is look where you come down to the 6-6. So that is then, on the way up, Fibonacci was being respected. On the way down, 618 bounce, 618 bounce, and obviously, well, the 6-6, the CC bounce, CC back test of the 786. Look at the Fibonacci numbers here. They're absolute perfection. Okay, you come down. Where do you come down to? The 236 here for the bounce. 236 for the bounce. Just really, really, really nice. What? Yeah, but like all I was going to say, I'm pretty sure I had this coming down to 236 again. But nevertheless, you can just see how amazingly respected that was. I think I must have lost a pivot, but I'm pretty sure I viewed this as coming down to the 236. But nevertheless, you can just see how well respected that Fibonacci channel was. Okay, so really, really well respected. Oh, it must have been off of this low. Obviously our last low then was off of the 236. This is what I must have been referring to. That our last low, you can see here. Okay, as we obviously come down 236. Where did you come up to as resistance? The 618 again. So yeah, for me, like when I do technical analysis, this is just like really, really, really incredible. Okay, the fact that you low at your lowest Fibonacci number, the 236. So you put in your low at the 236, and then where you top out is the 618. And just think, okay, so think where you topped out here was the 618. Well, I showed it at the start of the stream. From high to low was the 618. So you had high to low 618 on top of this massively big Fibonacci channel, also 618. I mean, yeah, you just can't make it up. So I need to probably like calm myself down. But you don't understand. This makes me like so happy and so excited, if I'm honest with you. But yeah, like I love this channel. Obviously, but last time it was touched was the bottom there at the 236, and it's obviously held support since. Okay, and moving on to the next slide. So yeah, this one. This is lovely as well. So this is called a 3 drives pattern. I have not done a stream on this yet, but I will do a stream on this. And someone else asking the question, have I done any streams on Wyckoff or Wyckoff, however you want to pronounce his name? And no, the answer is no, I haven't. But you don't understand. Like I have a list of so many things still that I want to cover. And it's just like time. Yeah. Obviously, I only do one stream a week, and I have a list of a lot more things that I want to do. But obviously, I can't just do 100 things in 1 week. So it's like, process of what I'm doing, what I feel is like maybe more basic to advanced or more core to extra, I suppose. But yeah, I haven't done Wyckoff yet. I haven't done this like 3 drives pattern. I haven't done a lot of the stuff that I've covered thus far. And it's just like, yeah, there's going to be, obviously so much more to come. But, yeah, this is a 3 drives pattern, and I love 3 drives pattern because it's all about Fibonacci, and it's all about the CC again. So you go from high to low, CC, okay? when you come down to, you're looking really between the 272 and a 1618. Okay, here you come down to between the 1414 and 1618. Okay, but as we all know, why was I buying this low? It was because obviously I bought this 7,400, and that was because it was a liquidity run, okay, of 7,400. So you ran the liquidity, you got a 45% pump in price. So I can say very proudly and honestly that I participated in that, and I've shown evidence. But obviously we got that rise. Where did it top out at? From high down to the low at the CC. So once you go high to low CC, you're on the realms of a 3 drive pan, you run down here, you hit the 272 to this sat, okay, or to the dollar, however you want to refer. Well, actually, this was front run by about $5, okay, so nevertheless, that counts, okay, so here we hit the 272, and your target is 11,000 actually, so it's very, very simple. You go from high to low, target to 618, okay, which is at 11,000, so another bullish pattern here. So I'm going to finish my water. But I need to calm it down. But yeah, this is really, 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 really nice. And I guess for me now, even if 8,800 or 8,900 was the top, yeah, these patterns are just all building the case that this is obviously bullish. Not obviously, but could be bullish. So moving on again, this is the Fibonacci speed fan. Okay, so Fibonacci speed fan, really, really, really helpful. And this is taken from the highs of 2017-18 to the lows of 2018. As you can see, when you come up, 7.5 rejections, moving back up. The 618 actually got only a day of rejection. You can very briefly see, if you see here, there's a red candle, but you got 1 day of rejection before moving up to the 0.5. Okay, obviously you can see the 618 back tested here, but for me that was more of a liquidity run on this. Wasn't influential, this number, too much. And the rest were. What we can see is the move up to the 0.5 Fibonacci, okay, before ultimately coming up to the 382 again, and not much of a rejection per se, but wicks. Yeah, if we zoom in, I'm just not going to zoom in. You can see the wicks of the rejection before ultimately moving up to the 2.5, which is your last one, by the way. And obviously the 2.5 is a Gann number, and the 2.5 here is what capped the market. Okay, so that's just absolutely incredible, absolutely incredible. So then think of how many things there were at the high. You had the 618 Fibonacci speed fan. No, you didn't. You had the 618 of the channel. You had from high to low 618. You had the 2.5 of the speed fan. There was a lot of confluences at the highs. But then at the same point, when something's running like that, you don't want to try and time the high. Like as a trader, more times than not, you don't want to be trying to time the high. Okay, because at the end of the day, that could have pushed on higher. Okay, so you're better off waiting for it the come down and then shorting the next rise. And obviously, you maybe get 3% less profits, but you do have a lot more security. Okay, but yeah, obviously there was a lot of confluence there, and also it was a monthly level. But yeah, anyway, moving on, what we come down to here was coming down to the 382, coming down to the 0.5. So you see the support coming in at the 0.5, didn't touch it here, finally touched it here. And then if you see here really, really closely, what I want to highlight is the 0.5 resistance, 0.5 support. So there's an SR flip of that 0.5 level. So yeah, that's the Fibonacci speed fan, was a support as well. So moving on, we next have the Gann fan. So just so many different tools. So this is the Gann fan. I've taken this from this was the lowest monthly close back in what would have been 2011. So your lowest monthly close from 2011 taken to the monthly high back in 2013. So monthly close in 2011 to monthly high in 2013. Absolutely amazing. It actually timed the high. Okay, it actually timed the high in 2018-17, yeah? Amazing. So it timed a high there, and then where you come down to, it took its time, because you did not actually touch it at the start of 2019, but we finally touched it, in a few weeks ago now, about a month ago. You finally touched that support. So what I want to highlight here is the way that this amazingly timed the high, and then it is finally being touched for the lows, and we've had a 38% increase in price. So potentially it's the low, potentially it's not, but it's nice to see that. Okay, so that's the Gann fan. Okay, so moving on to another one. This is a pitchfork. Okay, so a pitch fan. Okay, similar concept to the Gann fan, but obviously different. Okay, so here we can see the lower. This is the 1618 extension, by the way. So this yellow line here is the 1618 extension, because I've personalized this, so it's not going to be like specifics. But you know, here is the 1618 extension of the of the pitch fan, and what we can see here is it times the bottom in 2019, touch before coming up, and here it's just the fact that you're hovering around it again. So obviously we had lost it, and now, well, you are back above it currently again. Okay, so this is just another factor that you know, support flipped into resistance. You have now claimed that back as support. Okay, so that's obviously fundamental to be aware of. Okay, so that's the pitch fan, and again the pivots that I've selected here, so you're aware that was the lowest monthly close to the high of 2013 to the low of what was at the time 2014. Okay, so those are the three pivots selected to get those results. I'm just going to take a really quick drink before I move on. Trying not to FOMO. Yeah, please do not FOMO. Please do not FOMO into this. Okay, I really do not want anybody to FOMO into Bitcoin because of this video. Okay. Does the new Fibonacci Trader book cover the speed fan? No, it doesn't, unfortunately. Yeah, no, it doesn't cover it, actually. Yeah, that book doesn't cover the speed fan. Doesn't actually cover a lot of these tools that I've mentioned. But yeah, so this is the Fibonacci time, and this is just lovely. You all know. I'll try and load up the tweet really quickly. That obviously I stopped trading, and the day, I'm just going to load this up because it's like it's just lovely. Oh, here we go. Here we go. So, you know, the day that I come back was, you know, saying that it would be the 6th. And then I was saying that this is going to be the start of the bull market. This is a Star Wars reference, by the way, if you watch The Mandalorian. But, yeah, basically just saying that, you know, the 6th is when I believed that this is going to be happening. And it was all because of Fibonacci time. This guy never even had a doubt when I make statements like this. No, you shouldn't, I suppose. Well, actually, it's all about probabilities. That wasn't a guarantee, but yeah, the 6th of January. So now you're going to see why I had this sort of region of the confluence. I think it's absolutely lovely. Like, it's just amazing. So this is Fibonacci time. As you know, I'm going to be doing the Fibonacci time in 2 weeks, by the way. So the Fibonacci time is coming in 2 weeks. But oh my, how this has timed the highs and lows to almost perfection. Okay, so we're going from the inception. Obviously, I'm using Bitstamp here. The lowest price on the Bitstamp chart back in 2011, okay, to the 2013 highs. Okay, so that massively increase in price. Okay, from the low to the high, and then expanding on using Fibonacci time. As you can see here, from that impulse at the 0618, okay, what wasn't too influential, but we can say, you know, it obviously did catch a high, and you have to think in percentage terms, that's a big retrace. Okay, but the 618 here, not too influential in the market. But I think back in 2015, I think it's I'd be very surprised if you had people using Fibonacci time back then. Because in my opinion, back in like 2013, 14, 15, 16, and 17, arguably, the standard of trading was very low and it was run by retail. Whereas now in 2018, 19, 20, I think you've had a new form of trader come to them. I'm not, you know, I do think you've had a new form of trader come to the market where it's not just retail doing whatever they want, FOMOing in and pumping things anymore. You actually have to contend against institutions are now in the market. You have to contend against smart traders that know what they're doing, that are in the market. So this is why the market is harder, and it doesn't just pump anymore. Like, you know, just the market has got a higher class of or more traders than back here. But, you know, here there wasn't much of a reaction to the 618. The rest of them actually have really nice reactions. So as you can see, the one, okay, so impulse doubled essentially, is where it timed another high, but really started to get this impulse going. Okay, so we start this 2017 run. As you can see, the 1618 here timed a high timed a high. This is a 27% decrease in price. You can imagine that's a lot of money. Okay, so 27% decrease in price. This is where it gets amazing. The 2 extension timed the high to the day, by the way. Timed the high of the 2017-18 high at 20k. Okay, so look at that. Okay, literally timing the high. this is then where it's get amazing. The 2618 times the low, okay, times the low just before the run up. So then you have the 2 timing the exact high to the day. You then have the 2618 timing the period of lows before a 350% increase in price. And then you have the 3, again, potentially, because we don't know yet, but potentially timing a low. Look at how amazing the last 4 times it's been respected. I think that 0, 6, 1, 8 and 1 are arguably still very nice because this is a massive decrease in percentage. This was the start of a run. This one leading to a 27% decrease in price. This one just timing the highs for a massive decrease. This one timing the lows before, a substantial increase in price. And then again, this one potentially timing the lows before another increase in price. But that is not just the only Fibonacci time that I did have at this price. At this point, okay, so when you go from the 2018 high to the 2019 low, then the 2019 low to the obviously June, July highs, we had this region, this box here, okay, this box of, this is the one-to-one. This is not as amazing, I suppose, but nevertheless, we had a box of, because generally one would expect it to be longer, okay, but we had this box coming in of a reaction here, okay, and as I said at the start of the stream, we could, just put in a lower high and head back down, but at the very least, a reaction at these one-to-ones, okay? And then the last pivot that you had here was, this is back on BitMEX, okay? From the very start of BitMEX, okay? So the start of BitMEX to the highs in 2017, 18, okay? The 20k high. So the start of BitMEX to the 20k high, expanding that down to the 2019 lows at 3000s or 3100s. We also were hitting the 618 of this. And I just think this is amazing. You had so much confluence here in terms of time to expect something to happen. Okay, so refresh our memories. We had the 3. Okay, with the 3 of the just the start of Bitcoin. Okay, the 3 expansion of time. We then had 2 duplicates coming in of the one-to-ones, and then we also had from the start of BitMEX to the 20k high to the 2019 low. Okay, 2018 actually at the time, December 2018 lows, also coming in at the 0618. So I just think there was so much, in terms of time, this was to be a really pivotal level, okay, or at least expecting a reaction or a bounce to occur, okay, and kind of saved one of my favorite to last here. I think this is absolutely amazing, the level that we found the lows at here. And this is the 2017 to now point of control. I mean, I can't underestimate how important this is, or overstate how important it is. You have to think, if you are a really, really, really big trader, you have a lot of capital, okay? Maybe you're an institution, maybe you're a hedge fund, whatever it is. If you have a lot of capital, where can you fill your biggest orders? Okay, it's going to be where the most volume has been transacted historically, okay? Because you can mask orders a bit more easy, okay? But nevertheless, on top of that, this is going to be seen as a massive value region because that was the biggest support. So now that biggest support, what are you going to expect it to be? Still be support? Well, absolutely yes. And that was the point of control from 2017 to now. Look at it. It gets it by the dollar, more or less, the lows. So that's just the point of control extended. And you can just see, massively important. You drop down, you touch the point of control. I mean, you got to be expecting a reaction there because that's a massively important support level. Okay, it's a massive important support level. So yeah, that was another factor. Let me see the questions. Oh, there's a lot of questions come in. Yeah, I don't know. I could sign my copy of the new Fibonacci Trader and sell it. Yeah, I have a copy, but obviously I don't have a use for it anymore. But do we have all these tools for TradingView? Yes, all these tools are on TradingView. I'm not sure if they're free. Yeah, I'm not sure. Well, this tool isn't free, for example. This tool you have to pay for. But I'm pretty sure the others are free, all free. Yeah. You say don't FOMO. I'm saying don't FOMO because you got to do your technical analysis. I don't want you to come to me and say, "Oh, thank you, Dan, you so much. You made me money." just as I don't want you to come to me and say, oh, Daniel, you gave me a chart, you lost me money. I don't want to be held responsible for your wins or your losses, if I'm honest. So you just have to make your own decisions. I'm definitely not telling you to buy. I'm definitely saying don't FOMO, because if you buy because of this video, you're going to fail as a trader. I'm just going to tell you that if you buy solely because I've made this video, you're going to lose money 100%. You cannot buy just because I've made this video. You have to make your own decisions. Okay. I'm going to go through some extra charts for you in a second about what I believe of Bitcoin. The speed fan, yes, the speed fan, Fibonacci speed fan. Yeah, it's amazing. It really is. So where was that one? The Fibonacci speed fan. Yeah, look, it just is so amazing. And this isn't the only one. So I have a lot of speed fans. So if we load up BitMEX, yeah, we got some nice speed fans in here. So high time frame one. And then we obviously have some like lower time. Anyway, yeah, like speed fans. You can see the respect of this. It's just like so nice. But yeah, it's pretty nice. The date of the 3618. Let's tell you a second. So if we come over to here, put on our Fibonacci time. The 3618 is coming in at the 16th of April 21. Then the 4 is coming in. It's off the chart. But yeah, the next date, it'd be the 16th of April 21. Okay, so 16th of April 21. The next question: what indicator do you use for point of control? This is called the visual range profile. It's called exactly on TradingView. Fixed range. It's literally just called fixed range, isn't it? So where I have it here somewhere. Bum bum run. Do I not have it saved? Right, I'll just do it for you all live then. I thought I had it saved here, but I obviously don't. So if we just go on to indicators, and it's called fixed range, and I took it from the 1st of January. So 1st of January 17. Oops, didn't try and click then. Fixed range, 1st of January 17. You want to be very precise on these. So 1st of January. Oh, if I can actually find it. Well, 1st of January 17, click once, drag it. Obviously, it's going to slightly change now because this is a week later from when I done it. But, well, nevertheless, it's more or less the same, isn't it? So you can see there from the 1st of January 17 to where we are now. So that just encapsulates basically all of the bull run. Okay, so that is where you come down to. Look at that, the point of control tagged perfectly. And then I think this is the perfect thing, that you obviously tagged the point of control there, and then after tagging the point of control, that it's the area that you came down to, then the CC after the point of control, you know, it's just amazing. So yeah, that is the point of control, and that's how you use that tool. But this is a paid tool, so it's not going to be on the free version of TradingView. But yep. In TradingView, the 3 drives pattern has its own indicator, which you're going to see is located under patterns and 3 drives pattern. So it has its 3 drives pattern is in here. Have you done a live stream for speed? No, I haven't done a live stream for the speed fan yet. I haven't done that one yet. But yeah, that's all the patterns. Covered. So like, I am actually still expecting a rise in price of Bitcoin. Okay, so as I was like saying earlier to the group, obviously I'm like a really statistical trader. Okay, so I run data. You know, the way I get my data is I run, obviously, take my trades, record all my trades, and then I like make notes and have different statistics I like to like be aware of. Okay. And a statistic that I would like to share with you of why I believe we're going to move up again is that after, this is specifically from June to December 2019, so a 6 month period. Okay, and over the last 6 month periods, 83% of the time, so odds, that's good odds, 83% of the time, if the high that has formed on the chart is not directly followed by a 4-hour bearish engulfing candle, okay, which this wasn't, okay, as long as, well, really a bearish engulfing candle that then takes lows, and that has not happened here. If anything, we are building higher lows, okay, so we're building higher lows. So as long as the 4 hour is not encapsulated by a bearish engulfing that takes lows, then the likelihood is that you at least swing failure pattern to high, okay. So, you know, I feel that the odds are in my favor when I say this. Like the probability, you know, you have to remember, and I'm pretty sure I wrote this in the group. I'll try and like load it up where I wrote it, because you know, it's I don't even know where I wrote it anymore. But yeah, like, no, it was in reply to this one. Yeah, you know, you know, I can definitely be wrong. And this is what I want everyone to be aware of, that I can be wrong. This can definitely just fall from here. I'm not saying it's 100% going to happen, but probabilities, you know, this is what makes me confident in what I do, okay? It's not just like thinking, oh, this might happen, but when you have like probabilities and edges and favors in your favor, well, then that is favoring that's going to happen, because I would say it's more likely than not, okay? But definitely does not have to be the case. But what I'm expecting on Bitcoin is at the very, very least that. Okay, by very least, I mean that would be obviously the bearish scenario. The bullish scenario is that we take the high, maybe do a bit something like that, and move on higher, where I'm looking at then obviously 9,000 psychological, 9,150, 9,500, which I feel are very, 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 very key levels. I'm pretty sure I've got them marked on my chart on the local levels. Yeah. So yeah, those are some real big resistances for me. But I am, if I'm being honest, expecting a swing, well, at least a swing failure of the highs, which means that rather than just falling straight back down here, it can happen. It definitely can happen. We can just fall down like this, but I'm just saying, in my opinion, from the data I've collected, statistics of how Bitcoin's traded, you know, I trade this every single day. I've been trading this now 3 years for every single day. Well, actually 2.5, 3 years for every single day. And I can say that I have confidence in this happening. It doesn't mean it's going to happen, okay? But, you know, if the history repeats, it should happen. So we'll see whether this ends in a swing failure or whether we get the strength to move on again higher, which could be great, I suppose. But, yeah, there's that. But I'd want to just make you all aware of something, by the way, okay? So when we come to the end of the stream, yeah, this sort of like update. If you want these sort of updates live in the time, then obviously I do these in the champions group. I believe most here are champions, but yeah. Obviously, when we were hitting 8,750, okay, I did close out of some of my spot and also the majority of my leveraged long position, okay, and this was because we were just so overextended, and that's why it kind of like, yeah, it kind of sucks that I'd done this stream before the takeoff. Like when I was doing all of this technical analysis, okay, while I was like doing this TA, we were still sat at 8,100, 8,000. So if you had seen this a few days ago before the takeoff, like you'd have been guaranteed profits. Because this is why I'm also saying, like, you know, don't necessarily FOMO in, because recently I have been selling out of my positions. So that's just something to bear in mind. I have been closing. So I am fully now out of my leveraged long, and I'm still sat in spot. I actually bought 10%, but I sold 30% of my spot at the highs. And then I bought back 10%, you know, overnight. So I now have back 80% spot. Don't get me wrong, that's a lot of money. But I'm not in a leveraged long at the moment. Okay, so obviously I started to close out this around 8,070. And then I totally closed out of everything last night. And as I made, you know, just go back and search the post if you don't believe me. But, you know, I put this in the group. I was out of all my leverage long yesterday at 8,800. Okay, so 8,800, I was out of every leveraged position. Still, obviously, had 70% spot. But I was, you know, kind of expecting this retrace to happen, because if I show you the three factors that we had here, that we were reaching at resistance weekly, 8,750. The Fibonacci. This is another one, by the way, but a Fibonacci channel, okay, we were hitting the 236 of the Fibonacci channel resistance, okay, so we had resistance number 1, 8,750, resistance number 2 at 8,800, the 236, and another reason from high to low we were hitting the 618, okay, and another reason we obviously have this bearish pitchfork. We were coming to the outer line of the pitchfork, you know, reason number 4 that this is a good take profit area. And then finally, this is a pitch fan, and we also, this is the target, like this is target period for this. So this is target being hit. So that was my reasonings for closing out of all leveraged longs and selling 30% of my spot. And then didn't mean that necessarily I thought we were going to zero sort of thing, but I was just expecting a retrace in price slightly before ultimately carrying up again. Okay, so I was expecting this to carry on higher. As I said, like, I still believe that we're going to go up a little bit higher, but if it doesn't at the end of the day, I'm kind of covered for myself. But then I had the question of I've attached it here, but I want to actually, before I show you, I want you to think. Okay, I want you to think. Think back to the Fibonacci series that I've done. Okay, so I've done a Fibonacci series. My question that I'm going to put to you is, when something's moving impulsively hard, okay, to the upside or to the downside, if something's moving impulsively hard, what's the Fibonacci number that you would expect to be respected? Okay, what's the first Fibonacci number you would expect to be respected in a strong impulsive trend? I'll give you like 10 seconds, and then I'll give you the answer. But I have 100% covered this in my streams, so I hope somebody has the answer. But yeah, what's the first Fibonacci number you would expect to be respected in an uptrend or a downtrend, on like the pullback, on the pullback? I hope somebody knows the answer, because otherwise it means no one listens to my streams. Oh, there we go. Yes, already 2 answers. The 382. Absolutely, the 382 Fibonacci level. So this was the question that I received yesterday. Obviously, while we're still at the 8,800 region, 8,750, I was like asked, in impulsive moves like this, do you tend to look for retracements to the 382 rather than the 0.5 or the 618, for example? So yes, one would expect the 382 to be held at least for the first touch when it's moving like this. What happened from low to high? We hit the 382 overnight, where I bought back in 10%, didn't enter into a leverage position just because I don't want to do that while I'm well, I say that, but I do enter a leverage position while I'm asleep sometimes. But nevertheless, to add back into my spot, this was an absolutely fine position for me. Low to high, we hit that 382, and obviously since then we did have another impulsive move to the upside. But yeah, that's was a good one for you all, because really, really important that yeah, pretty crucial. The low to high 382 there, and that's the bigger scale 382. Okay, because obviously you could be taking a fib from here, but 382 from where it got very impulsive. One would expect that to hold, and you can see it holds for more or less the dollar. Okay, and I want to show you on top of that what you also had. Okay, and that is the wrong one. I think I have this in here somewhere, I hope. I have this. Yeah, here we go. So what you also had is Confluence. Okay, so obviously from low to high of the impulse, you went from low to high, you had the 382, and then on top of that, low of the consolidation to the high, you also had the CC on the 382 there. So that was like some confluences of this position to hold. CC and CC and 382 of where it got impulsive, you see. So from low, high, 382, low, high, CC. So there was confluence for this to bounce to that region, basically. Any other questions that people might have? A lot of people said 382. That's very, very good. I have done a stream on Fibonacci channels. So Fibonacci channels is something that I have covered. So I do really recommend that you watch that stream. But basically, yeah, Fib channels. But I've done a stream on Fibonacci channels. But yeah, I'd just say go and watch that. I had my stops just below it. That's very good. So some Mr. Brutality had his stops below this, didn't get stopped out. So yeah, obviously that is good. Well done. 382, 382, 382. Yeah, so well done everybody. You all got that right. I'm glad people listen. So yeah, that's basically given you a perspective of the bullish scenario on Bitcoin. I think it is important to realize that I am out of leverage positions now. I have taken profits. So even if this fell down from here, not that it helps any of you, but I've still made money. But yeah, I just still think that we're reaching like a really crucial position if we just hide everything here, put on some all of these back on the local levels. I mean, a few things to bear in mind. So if we just load up BitMEX, I'm pretty sure the funding rate is a bit more neutral now. yeah, so look at this. The funding rate is much more neutral. That's nice. Okay, so you know he's gonna. One thing that you want to bear in mind is the open interest. Okay, so with the open interest creeping up so high, so open interest currently sitting at 850 million. Okay, so this is really, really, really high open interest. If we put this on like a 1 hour chart, you can see that this is starting to get really impulsive. So the open interest moving really impulsively while consolidating. This is going to be one of two things. If you break down from this, okay, it's probably going to get a very heavy retrace, okay, and you just got to use a stop loss. If you're already in a long, I'm not telling you to open a long now, but if you're in a long, 100% have to use a stop loss. Because what I fear, okay, if I'm incorrect and we do move down from here, that the move down is going to be very, very, very ugly in fact that it will just go very quickly down, okay, and you won't have time to get out manually. So you're just going to have a hard stop loss because it's probably going to trickle down very, very quick with the amount of open interest that's open, okay? So you just got to be careful because it's very likely that if we do break support, it could go down very, very quickly. So just be aware of that. And obviously, if we break up, then that's very, very nice. But yeah, one thing I would be very aware of is the amount of open interest, amount of new contracts that are opening inside a consolidation. That is generally, it's not bearish per se, it's not bullish either. It's just, well, when this breaks, you're going to expect some follow through. By the way, so you know, that's a lot of new positions opening. Yeah, so you've got to be aware of that. But yeah, this has gone pretty nice. During the stream, we've even moved up 1%. So maybe if you did FOMO in at the start of the stream, so our start of the stream was here. At the end of the stream, you'd be up percent. You could have made a scalp, but definitely hope that you didn't do that. Because I really don't want people to FOMO in from this video, because you know I could. Yeah, I just don't. That was not the reason for like putting this to people. Yeah, that was more my reason basically. But yeah, when I was putting in this, obviously before the rise, when I was putting this up, the more macro TA I'm doing, the more bullish I'm getting, and yeah, I don't know. Like I just saw this come together, and I guess this is the thing. Like when I say to you all, look for confluences. Okay, how many times have I said you need to buy when it's confluence? How many of you have used like 20 different tools to find your confluences? But I just would like to state there that obviously when day trading, I'm not using 20 tools because that would just be insane and actually probably detrimental to trading, because you'd have like analysis paralysis where too many things is just going to fry your brain and say, well, this is a buy, this is a sell, never going to work. But obviously, like when you're looking to accumulate a position, when you're looking on the large term time frames, you know, this is the sort of confluences that give you the strong probabilities in your favor. When you find these like 20 odd tools, I actually haven't included some of them, and some of them that I haven't included were posted in the Champions group while I was going through all of this, but I haven't included some of them, by the way. So there will be some hidden gems if you want to go back and search through that. But yeah, how many of you would like go through 20 tools to find it? I mean, it's crazy. But yeah, that's surely is confluence. Only if it swing failure patterns the highs, because if it doesn't swing failure pattern the highs, I'd look for still higher levels. So I wouldn't have a short in place sort of set 100% no. I mean, this was a post that I put in the group yesterday that I'll highlight to you all because I feel this is really, really, really important. This was what I posted in the group. Obviously, before we had the rise, I was just saying, you know, while we were still at 8,400 or whatever it was, like this was before we moved up to 8,900. So I was like saying, you know, so many people lose money while in an uptrend because they just keep trying to short a high. You know, think for a second. From the rise from 5,000 to 14,000, how many times did you try and short that high? Okay, on the rise from 7,400 to 10,500, how many times did you try and short that rise? I can honestly say, hand on heart, and also obviously documented in the group, during that rise, I didn't short once. So I didn't short from 7,400 all the way up to 10,500 because I had no interest in trying to time that top. Just as I am now, if I'm honest. Like, So many people lose money in an uptrend because they have an ego. This is what I believe it is. They have an ego of saying, I want to time the top, I want to time the top, I want to time the top. And this is where like Twitter is insane, because some guy is going to short the top, try and short the top 10 times. He's going to win one trade. He's going to be down a lot of money. And then he'll go on Twitter and post, look at me, I shorted the top. That is like what you call like trading for an ego. I literally could not care less. If I'm totally honest with you, I could not care less about shorting the top. Give me the retrace, give me the retest. I'll short that. But I just have no interest in trying to short this top because I can make more money continuing with the trend. Like I said yesterday, more money to be made riding sport until we see weakness. Who cares if you don't short the very top? And obviously, when I posted that yesterday, my opinions on that still say the same. And since then, we moved up another 2%. So if you tried to short that yesterday, you didn't listen to me because we moved up another 2% since I wrote that. But yeah, just like I have, if I'm honest, like no interest in trying to short this high, apart from sculpts, because today I have sculpt Bitcoin, but I mean on like a bigger time frame. I don't care about shorting the top here. Couldn't care less if I don't get it. If we break down and do some form of retest, well, I'll short that. And instead of shorting here, I short a little bit lower, but I have more probabilities, have more odds in my favor, and that's what I care about, really. Not interested in trying to time this exact high. But absolutely, if we see a sign of weakness, I will then short. Okay, I'm not open to not shorting. I 100% will short, as you all know. I made lots of money on this downtrend, but think back to here. Okay, so I was long down here. I rode that up to the highs, but I did not short in this consolidation period. Okay, that's something I want you to be really, really bigly aware of. That in this period, I did not short. By the way, I was not short all of this, but when we dropped and retested, that was the short, and I rode shorts from here. As you all know, actually, I closed down on my shorts at the lows, so I did ride shorts from here all the way down to here, and that's obviously all documented in live streams even, where in some of the live streams we were timing these highs, but I did not short this, and I short the sign of weakness is dropping outside of the range. You backtest the range, ride the short. Just like I'm not interested in shorting for the macro, this consolidation here. I would gladly wait for it lost and a backtest. Or, obviously it could just fall straight down. But, I'd be much prefer that sort of back end and then trade it like a sign of weakness. Didn't short this, shorted the sign of weakness. I'm not shorting here, but I will short a sign of weakness. And this is like what you can call waiting for confirmation. And if our confirmation comes down here, well, yeah, I obviously miss out if it's a very, I could get in at market. Who knows if I'm going to be at the computer or not. But, if it happens while I'm asleep and I have no orders set, then obviously I'd miss out this. But, that's just part of trading, and I honestly couldn't care less. So, yeah, that's my perspective, I suppose. And I hope that has helped you. I still think 8,460, 8,460, I believe is like a good area if you get pulled back to 8,460. 8,460, 8,300 are some of your main supports at the moment. Obviously on the smaller term time frame, you're within the triangle consolidation now, so aggressive entries here, which, but yeah, on a bigger term time frame, if you do retrace from here, 8,460, 8,500, 8,300 are some crucial supports. You obviously have this 1 hour order block, 8,100. Really, really, really don't want to be going below that because that is a massive red flag. But at the moment, as we're speaking right now, everything's looking good. There are no red flags. But as you know, this is trading. That can change like this. And I could turn bearish in a minute if I saw the data that showed me to be bearish. But at the moment, I don't have that. So I'm not bearish, basically. The highs for the swing failure possibility, 8,916. Yeah, I'm sure a lot of people did. So yeah, this guy lost a lot of money trying to short 2019 run lesson learn. Yeah, like so many people lost money trying to short the high. Like even on this run, I'm sure so many people lost money, and there was like no signs to short this. There's just no signs, but people just they just try and short the highs, and it's a really bad strategy. Didn't long the run, but did short. Yeah, this is the thing as well. Like, obviously, I've not got a leverage position open right now, but if we move up to 9,300, I still have 80% of my spot holdings, and that is a hell of a lot of money that I could make. So, like, myself, I couldn't care less if I'm not in a leverage position, but that's myself personally because I have a lot of spot. But if you do not have a lot of spot, then obviously you have to think differently than me. Like, this is why you can't follow my trades, because the way I trade is very personal, specific to me. You know. Hence why it's a very bad idea to follow anyone blindly, because the way I trade and the way I have my risk management is going to be different than you. Hence why I'm not a signal provider. I'm trying to teach you so you can make your own decisions. Yeah, so this was a really funny one. I'll load this up because it's quite commercial, and I'm sure it won't be like taken the wrong way. But basically, I'm really sorry for showing your name, but I'm sure you take this with a pinch of salt. It's obviously like everyone is here to learn, so everyone's going to say things like this. And also, questions are really, really good. But you know, the question was, you know, there are really bearish divergences on the chart. My reply was, yeah, no, the bearish divergences are a reason I think will go up. Can't tell if you're joking. Can you explain? Bearish divergences are one of the most obvious things traders check first, and it's so obvious. You know, I'm sure many have acted on it and shorted it. Maybe I'm wrong. Maybe we fall, but I would be surprised. Don't think like everyone else. Remember that 95% lose money. So, you know, there are bearish divergences. If I load up the bearish divergences, look at them. They're staring you in the face. Aren't you thinking, oh my God, look at these bearish divergences. This is definitely a short. Look at that. This is really, really, really bearish. You know, that's what retail, I think, are going to think. And this is why 95% of traders lose money, because a textbook, a trading book is going to tell you, see bearish divergences, you know, look for some shorts. Whereas I'm telling you, if everybody is thinking that, do the opposite, basically. So that was a bit funny. And if you, yeah, so that was basically why I was saying bearish divergences are the reason we're going to go up. But yeah, that was a bit funny. But yeah, that reminded me, because the question was, we have bearish divergences. Do you think that's going to make us go down or something? What was the question? Yeah, so there are bearish divergences, but I think we're going to go up because I think everybody is going to be like, oh my God, this is a short. Hence, bigger pockets can push you up. No worries at all, everybody. Yeah, I don't have a stop on it, but yeah. I'm happy to like take a, you know, if I have to close out like a lot lower. You have to think, this is the thing. I was accumulating my spot at the lows, and the reason I don't care having a stop loss, because even if you drop down to 7,800, anyone buying now, if you drop to 8,800, is absolutely wrecked. But because my position of spot was built down here, even if we drop to 7,800, I'm still closing in profits. So that's why I don't have a stop loss on my spot. I guess the only way I'd lose money is if we drop straight to 6,000. I don't think that's going to happen overnight. So, you know, I don't have a stop loss on it. But again, that's very specific to me, because even if we had a drop to 7,000, I'm still going to be closing in you know, profit. So, you know, that's why I don't have a stop loss. Yeah. Cool. Yeah, I'm gonna like wrap up the stream now. So that any other questions I'll answer over in the Discord section. So just throw any other questions over here. But I'm gonna wrap up the stream. My throat starts to feel it after I've run out of water, and I've been going on for an hour and a half. So yeah, that's fine for me. Be aware of the resistances that you are at, but yeah, it's not looking so bad at the moment. Although you have a potential hanging man on the daily. But yeah, anyway, who cares about that? I hope that you've all thoroughly enjoyed this stream. I will, yeah, be excited to see you over in the group chat. Just be aware that, you know, at the end of the day, we could put in a lower high and come down to lower prices, but, you know, it's looking nice. So yeah, thank you everybody once again. Thank you. Hope that you have enjoyed, and yeah, may this be a great 2020 for you all. Thank you. And yeah, good night everybody. Cheers. Bye-bye.